Hello guys, welcome back to another episode of River Rock FinTech. So today I'm just going to share about my opinion of a recent market. And I do apologize for not uploading video for some time because I was extremely busy. I was moving the house and I was dealing with a lot of issues, a lot of family issues, which is the reason why I have been postponing to upload video for quite some time. I supposedly couple months, so I haven't been uploading English video for quite some time. So this would be the other episode of me sharing about my insights of the global economy and also the market. So first of all, I want to talk about where we are where are we actually right now. If you actually look at the oil price, we're seeing a very strong resistance level around $60 per barrel, and you can see the oil future contract right here, and so that's why the actual economy is actually I don't think our economy demand has been anywhere improving. Yes, we might be slowly recovering, that you're seeing major markets and sectors starting to recover, and we start seeing a lot of vaccines come out from the market, and then you are seeing more and more people taking the vaccine. But the problem is the real economy demand is not somehow recovering. So that creates another divergence, because what you're seeing from the index market, you see the S&P futures going to 4,000 point. Well, that's kind of insane. And you have seen Dow Jones reaching 33K, but at the same time that NASDAQ would be comparatively weak, right? So if you're actually seeing all these index performance and Shanghai Composite Index reaching 3,500, yes, there's a still resistance level of Shanghai Composite Index around 3,500. So we are going to see if that resistance could still hold. But my reckon is that we're very close to a major market correction, and because there is a huge divergence between the index performance and also the economy performance, right? So basically, you're seeing vaccination continue, but in the same time we're seeing the virus kind of evolve and then turn to another kind of subspecies and other kind of virus. So it's basically like a competition between the virus and our economy recovery. So we're seeing these divergence. We're seeing we don't have a recovering demand, and at the same time, but we have a skyrocketing index, and we have a weak NASDAQ. And before we're seeing NASDAQ was Tesla was down massively, and all the way, and then when we're seeing the support all the way to 600, around 600 and I think $630 level of Tesla. So we're seeing a weaker Tesla, but we're going to see a new competitor like Volkswagen, and more car producers and competitors are going to join the market. So it's going to be a tough war for Tesla, and to see if it can actually remain its competitiveness and its edge. And because a lot of traditional car producers are going right into these electronic vehicles market, and with Biden's new economy stimulus, which is historically never seen this kind of scale. We're talking about tens of trillions of dollar injection directly to the American market, and that is unheard of. And with that, I believe that Biden is going to, of course, he's going to inject a lot of money in the electronic vehicle sector, EV sector, and a new energy sector. So these are two of the sectors that you definitely need to look at. So today it's like Monday because I'm in Asia, so we're gonna follow kind of Asian time. So the Asian time, tonight will be the market will be open. We're gonna see how S&P futures and oil futures gonna perform, and we're gonna see how the sentiment of tonight's market gonna play out, right? So this is a typical day for macro traders, that you look at all these indices, that you can look at all these market and then kind of formulate your own trading perspectives. Right, so we're going to see the headline: global LNG demand jumps the most since the pandemic dashed trade. So one thing that really kind of holds the LNG prices back is because a lot of industrial productions are not actually because a lot of for example restaurants. They're using a lot of consumption of LNG, so a lot of restaurants, of course, they are closed and temporarily stop operation because of the pandemic. So that's why you're going to see more and more LNG, increasing demands of LNG, and going to see the LNG price fixed to pre-pandemic level. So LNG would be potentially a good trade to put on your watch list. And also, I'm still going to say that you're going to be very careful of Chinese and American U.S. relationship. It's going to get intensified, and that I believe is upcoming trending for the next couple years, because I understand, I've read what Kissinger has been said, Kissinger has said, China and U.S. should remain a kind of peaceful conduct, and both of them should be remain calm, and should not. And he's seeing these first World War scenario. Of course, it's a first World War scenario. All right, so this is basically what I think of Kissinger. If you actually look at his book, you just need to read his book and actually examine his policy. He made a couple mistakes. I mean, he's a wonderful scholar, and he's a living legend. And but the point is, the way I don't really agree with his statements and a lot of his policy, because for example, once you're seeing Vietnamese War, and then the Vietnamese War was bring severe impact to both the Americans' military power and also the reputations, international reputation. So I don't believe that Kissinger is right about both sides should remain calm to a certain degree. Of course, I still wish two party could remain calm, but I don't think this is a feasible short-term target. And I don't believe both of them are capable of holding their basically that you're gonna summarize. I'm gonna summarize. It's not going back, right? Anyone who's been saying that U.S. and China is going to recover its relationship back to its previous status, I don't think they're this just a bunch of nonsense. So China and U.S. is not going back to its previous stage, as you can see from the Biden administration. Even though Biden is, I don't think he's mentally capable of being an American president. But the problem is he kind of brought out all these administration, and we're seeing his policy is going to mature. He's building his strategic moves against China, and then formulate this new alliance. So basically, what you can see here is a bit more of a hawkish Fed. Federal Reserve is trying to expand for more dollar, expand that dollar supply, in the same time raising interest rates. So because they're gonna fight against this inflation, right? So I've been talking about this inflation like before. I mean, before, like I think it was before the beginning of this year, right? I was talking about like this inflation, but a lot of economists and traders did not see that coming. So if we actually go back to January and February, we're seeing a lot of commodity prices, like commodity price kind of booming, because you have got this inflation coming. And that was a great trading opportunity, of course. You can take advantage of this volatility. And I was basically, my thesis was that dollar is going to get further strengthened, and then Fed has to raise the interest rate. So I think that's the case. Dollar is going to be strengthened, and that strengthening is going to kind of scale. He's going to raise the interest rate that I have no idea. So, okay, that's for today's episode. I wish you well and fine, and hope you guys can subscribe to my channel and share my channel, and put a thumb on my channel, and you can feel free to leave any comments, and if there's anything that you're interested, you wish to discuss, then you can leave it in the comment sections below, and hopefully be able to find time to make video commenting on those subjects that you wish to talk about. Okay, so that's pretty much everything for this episode. So I will see you guys next time. Bye.